Welcome to the Deep Dive. We're here to help you navigate through complex information quickly, giving you the key takeaways you need.
That's right. We cut through the noise so you get straight to the core insights.
And today, we're taking a deep dive into the Q2 2025 earnings call. It happened back on July 30th, led by CEO Emma Walmsley and her team.
Yep, the usual leadership lineup.
Our mission today is, well, to really distill the numbers, understand what management's thinking strategically, and see where things are headed.
Basically give you the essential intelligence straight from the call itself. We've gone through it all to figure out the why behind those numbers.
Okay, so let's kick things off with the headline figures. It looked like a pretty strong quarter overall.
Definitely strong. Core earnings per share, 46.5 pence. That actually beat consensus expectations by about 8.6%.
Wow, okay. 8.6% beat? That's pretty significant outperformance. What about the top line, the revenue?
Revenue came in at 7.99 billion pounds. So that also topped consensus by about 2.4%. And maybe more importantly, that's 6% growth year over year at constant exchange rates.
Right. The constant exchange rate number really shows the underlying business strength, stripping out currency moves.
Exactly. And profitability looked good too. The core operating margin expanded nicely, 180 basis points at constant rates, hit 32.9%.
Okay, 180 basis points. That points towards, some decent financial discipline, doesn't it?
It does. And you see that reflected in the cash flow. They generated 1.1 billion in free cash flow just this quarter.
Which brings the first half total from operations to what, about 3.9 billion?
That's the number, 3.9 billion. And, this financial health flowed through to shareholders.
Ah, yes, the returns. Dividend, buybacks.
Yep, a 16 pence dividend was declared. And on the buyback, they've already done over 800 million of the planned 1.3 billion program for the year.
So decent returns there. How did the market take all this? Shares move much?
It was positive, but, modest. A slight uptick. It signals confidence, sure, but maybe not overwhelming excitement. Suggests investors are still watching some things closely.
Like the pipeline, I imagine. Which is a good segue. Let's go deeper into the actual drivers and the strategy here.
Right. Because this is where you really see that strategic pivot they've been talking about since the Haleon spinoff.
And the specialty medicine segment seems key to that pivot. How did that perform?
It was the standout. Absolutely. Surged 15% at constant exchange rates. 15%.
15. Wow.
Yeah, and get this, it now makes up 40% of their total sales.
40% already. And they have that target, right, to push it over 50%.
Exactly, by 2031. So this quarter's performance really validates that strategic shift. It shows it's working. They're moving toward those higher growth areas.
Was the growth concentrated or more spread out within specialty?
That's the other interesting part. It was broad. Double-digit growth across HIV, oncology, and their R&I portfolio that's respiratory, immunology, and inflammation.
Okay, so not just reliant on one therapeutic area. That diversification within the high-growth segment is pretty encouraging.
Definitely suggests a healthy R&D engine and good market execution across the board.
What about vaccines? Usually a solid contributor.
Still solid. Grew 9%, mostly driven by Shingrix, the shingles vaccine, and also their meningitis vaccines. Europe was particularly strong.
And the Shingrix global strategy seems to be paying off then.
Clearly. About 72% of Shingrix sales are now outside the U.S. That's a big shift. Reduces reliance on the U.S. market quite a bit.
Good point. Now, HIV is often a major growth engine for them. How did that look?
Exceptional, actually. Grew 12%. And the real story there is the long-acting injectables.
Cabenuva and Apretude.
Those are the ones. They powered 7% of that HIV growth, and they now make up a third of total HIV sales in the U.S.
A third already. That's rapid uptake.
It is. And new study data apparently showed strong patient preference for those long-acting options, which makes sense. Convenience is huge for adherence in chronic diseases.
Absolutely. Okay, so strong performance from the current portfolio. Let's shift gears to the future innovation and the pipeline. They mentioned these scale opportunities.
Yeah, they highlighted 14 specific R&D programs they see as scale opportunities. Each one, they believe, has potential for peak sales over 2 billion pounds by 2031.
14 potential blockbusters or multi-blockbusters. That's ambitious. A big statement about future growth.
It is. And they're showing execution on the near-term pipeline, too. For 2025, they're targeting 5 major regulatory approvals.
And how many have they secured so far this year?
3 are already done. Penmenvy, Blujepa, and Nucala for COPD. So they're tracking well against that goal. Shows the R&D and regulatory teams are delivering.
Okay. Now let's talk about one that's definitely on everyone's radar, Blenrep. The oncology asset, there was an update on the FDA timeline.
Right. The PDUFA date, the FDA's decision deadline got extended. It's now October 23rd, 2025.
An extension. How did management sound about that? Confident? Worried?
They expressed very high confidence in the data, said discussions with the FDA are ongoing and constructive. They really emphasized the overall survival benefit shown in the DREAM-7 study.
And the potential for community administration, right? That would be a plus.
Definitely a convenience factor. But, the market's probably a bit skeptical given Blenrep's past history in the U.S. It had that prior withdrawal for another indication.
Ah, right. Context is important there. So the market might be taking a wait-and-see approach despite management's confidence.
Exactly. Although it is approved in other major markets, Europe, Japan, UK, Canada, Switzerland, that does add weight globally. But the US FDA decision is, well, it's the big one everyone's watching. A major binary event.
Makes sense. Any other key pipeline updates? What about depemokimab?
Decision expected in December 2025. That's for asthma and chronic rhinosinusitis with nasal polyps. They also reported positive results from a continuation study, AGIL.
And they're developing it for COPD, too.
Yes, they've started a big COPD program for it. Seems like they're aiming to really own that ultra-long-acting respiratory space, carve out a leadership position.
Okay. And beyond internal R&D, what about business development? Any interesting deals?
BD's definitely still part of the strategy. They completed the acquisition of efimosfermin, that's for steatotic liver disease, including MSH, which is a really hot area right now.
MASH, yeah. Huge unmet need there.
Huge. And they also announced a deal with Hengrui Pharma. It's a multi-asset deal in RI&I and oncology.
How many assets?
Brings in 12 mid-stage assets. One key one is potentially a best-in-class PDE34 inhibitor for COPD. Crucially, the deal includes options on the other 11 assets.
Options. So flexibility to pick the winners later. Smart.
Exactly. Gives them pipeline optionality without committing fully upfront.
And looking ahead to the rest of 2025, any major trial starts?
4 new phase 3 pivotal studies are set to kick off in the second half.
4 phase 3s. Okay, what are they?
There's a B7H3 antibody-drug conjugate, or ADC, in small cell lung cancer. IDRX42 for GS, that's gastrointestinal stromal tumors. Efimosfermin, the MAS drug, moving into phase 3. And a new ultra-long-acting HIV regimen aiming for 4-monthly dosing.
4-monthly HIV treatment. That would be a game changer.
Potentially, yeah. So it's a pretty robust slate of late-stage activity. Shows commitment to bringing things through the pipeline.
All right. So, strong current performance, active pipeline. How does this all tie back to the financials and the outlook? You mentioned margin expansion earlier.
Right. That expansion was attributed to, disciplined spending on SG&A, but also strategic reprioritization of R&D.
Right.
So not just cutting, but investing smarter, focusing resources.
And based on the strong first half, they updated the full year guidance.
They did. They raised it toward the top end of the previous ranges.
Okay, so what are the new ranges?
For 2025, looking at 3-5% turnover growth now and 6-8% growth for both core operating profit and core EPS.
Raising guidance is always a good sign. Signals confidence for the rest of the year.
Definitely. And importantly, that guidance includes an assumed drag from taxes and tariffs, about 17.5%.
Oof, 17.5% is a significant headwind. How are they planning to handle that?
Management sounded pretty confident. They pointed to their ongoing significant investments in U.S. manufacturing and supply chain optimization as key mitigants. Suggests they've been planning for this kind of thing. Building resilience.
Proactive, not reactive. Good. And capital allocation. Still balanced.
They reaffirmed the strategy. Prioritize growth investment, R&D, BED, but also deliver shareholder returns via dividends and buybacks. They did flag about £3 billion in Chang's cash outflows in the second half, though.
£3 billion? For what?
It's mostly planned stuff. The Zantac litigation settlement, completing those efimosfermin and Hengrui deals, and continuing the share buyback. So a busy period for cash deployment, but mainly strategic.
Okay, that makes sense. So putting it all together, how are investors viewing this? What's the context?
Well, as we said, the market reaction was positive, but measured. Appreciated the strong results and raised guidance, yes. But that modest share price move suggests, some skepticism or maybe discount related to pipeline execution still lingers.
Investors want to see those big pipeline readouts deliver, maybe.
That seems to be the case. Looking at different investor types, the buy-side folks holding stable defensive positions probably like the strong cash flow. Hedge funds, meanwhile, seem to think the tariff risks are manageable, largely contained.
Interesting nuances. What about the sell-side analysts? Any key calls?
Bit of a mixed bag, reinforcing that caution. Berkeley has kept an equal weight rating. They flagged potential deceleration in HIV growth in the second half.
Okay.
And Jefferies stayed neutral. They're explicitly waiting for more clarity on that Blenrep U.S. approval. Really highlights how pivotal that decision is for sentiment.
Makes sense. Blenrep keeps coming up, looking at the bigger picture, sector trends.
The trend of rotating into specialty pharma and oncology growth areas continues. And that aligns perfectly with this company's strategic pivot. They're basically aiming right for where the puck seems to be going.
Positioning themselves in the growth sweet spot.
Exactly. Now, there are still macro headwinds, U.S. drug pricing noise, those EU-U.S. tariff issues, but management expressed confidence in their mitigation plans, especially that strong U.S. manufacturing footprint.
So the key things to watch moving forward are pretty clear then.
Absolutely. Those binary events, Blenrep FDA decision in October, depemokimab decision in December, also the Q3 results and any guidance updates then, and of course ongoing oncology data readouts.
And if they deliver on this raised 2025 guidance and hit some of those pipeline milestones,
that would really help solidify the narrative shift.
Yeah.
Moving from a restructuring story to a compounding growth platform, that could potentially lead to a re-rating of the stock, getting it closer to its global pharma peers.
And they seem confident long term, right? Didn't they reiterate that 40 billion sales target?
They did. Projected sales exceeding 40 billion by 2031. It's an ambitious goal, but it underpins everything they're doing strategically right now.
Okay, right then. Time for our slightly different segment. This is not financial advice, where we toss out an outrageous but plausible trade idea purely for thought provocation, of course.
Just spitballing like analysts sometimes do. Remember, not advice.
So, given management's very high conviction on Blenrep getting that U.S. approval in October, a conviction maybe not fully baked into the share price or analyst views?
Right, there seems to be a perception gap there.
What if an aggressive investor considered a bullish, highly leveraged play, like buying out-of-the-money call options on the stock, maybe expiring late Q4 2025 after that PDUFA date?
Okay, so a direct bet on that specific binary catalyst. Leveraging up on management's confidence, paying off when the market is still hesitant.
Exactly. Capitalizing on that potential upside surprise if Blenrep gets the nod. Now, how could you maybe balance or hedge that kind of focused bet?
Well, you can potentially pair it with a protective put strategy on a different pharma player, maybe one more reliant on older HIV drugs. Because you'd be anticipating that this company's own long-acting HIV pipeline, plus others coming to market, could accelerate competition and market share shifts away from established players, maybe post-2028 or so.
Interesting. So playing both the short-term catalyst, Blenrep, and anticipating longer-term competitive shifts driven by their other pipeline assets.
Yeah, the core idea is taking that high-conviction stance on Blenrep, betting that management knows something the market doesn't fully appreciate yet, and using options to potentially magnify the return if they're right. High risk, potentially high reward.
Definitely fits the outrageous but plausible bill. Okay, let's wrap up this deep dive.
So summing up Q2 2025, strong financials, raised guidance for the year, and clear progress on the pipeline, especially moving towards those high-growth specialty medicines.
The strategic pivot away from consumer health seems well underway, validated by that specialty medicines growth.
For sure. But those upcoming catalysts, Blenrep in October, depemokimab in December, they're really crucial for the near-term story and for investor perception they need to deliver.
Absolutely. And just a reminder, everything we've discussed here is purely for informational purposes. It is definitely not financial advice.
Please do your own research before making any investment decisions.
We hope this deep dive has given you some valuable perspectives on the latest earnings call. As they keep pushing towards that big 40 billion target for 2031, here's something to chew on.
Uh-oh.
Is their current pipeline, even with those 14 scale opportunities, actually deep enough and diverse enough to sustain that kind of long-term compounding growth? Especially thinking about the risks, what if Blenrep doesn't get approved or another key asset stumbles? How robust is the next wave?
That's the multi-billion pad question, isn't it? Sustaining momentum beyond the current key assets, something to watch closely.